Hello, it is Tuesday, the 2nd of December, 2008, and this is Brian Shannon from alphatrends.net. We had a really choppy session here today, but there were some encouraging signs. It may not be quite obvious here when you look at the daily time frame right away, but we did see an increase in volume, and the market finished right up near the highs of the day, up 90 cents or 3.3% on the Qs. Obviously, we've only retraced a part of yesterday's big decline, but like I said, we came up on heavier volume, and we had a lot of volatility in here. Early on, it looked like maybe in here once it made this higher high to complement this higher low, and it was back above the daily VWAP. It looked like we might be building for a real strong rally throughout the day, and I was keeping an eye on this two-day VWAP as well. That two-day VWAP broke down later on the day. It took out the one-day VWAP as well, and it seemed as though maybe we were going to go back and test the lows, but instead we had this choppy action that comes at a pretty critical area here from last week's lows, this Monday and Tuesday area that we've been keeping an eye on. But at the end of the day, again, we saw that the market did make a higher low in here, and now we've got a little bit of resistance just under $28 a share that maybe this market can build, jump back up above that 5-day moving average, and then be able to hold on to some of this strength here for more than just a few minutes. The very choppy action that we saw today is actually good because it gets a lot of people shaken out of the market and puts the stock in what's known as strong hands. That is, the people that are going to be holding on with a little bit more conviction, and they aren't as easily shaken out of the market. That builds a stronger level for the market to potentially rally higher from. Obviously, the market remains very badly damaged. We're still below this low, which isn't a good thing to see, that the October 24th low right here. But I think, and I think we're really going to have to clear probably this peak right here, 29.5, in order to get anything sustainable to hold. If we take a look at a trend line that looks like this, we can start to look at another one of these inverted head and shoulders patterns that seems to be forming in here, and it would be a move past the $29 level that would validate this pattern and give us the potential for some upside. So, I don't like to look for these inverted head and shoulders patterns, but when they're there, you got to point them out. You got to look at the potential upside objective that it would give us here, which is about 4 points, or up towards about $33 a share. $33 a share would be a very nice percentage rally. It wouldn't do anything to damage this downtrend. In fact, it would bring it just up to maybe a little bit above that declining 50-day moving average. But, this market, maybe we're seeing this as the higher low here on the daily time frame. So this level will be important for the market to hold right now. We were looking previously at this Fibonacci, that the two-thirds retracement right down here at about $26.60, lined up with this high right here from a week and a half ago Friday. So I think basically from 2660 to 2680 is a pretty important level. If the market can hold above there, then perhaps the sellers have run their course for the short term, short to intermediate term, and maybe we can get a rally that sustains itself for more than a couple days. There were, it was choppy, it was frustrating in there today, but it is, at the end of the day, somewhat encouraging. Oil, it was nice to see that, some of these markets weren't moving all together. So oil we saw was down. Usually, lately it seems as though everything's down at once or everything's up at once. So we saw money flowing, continuing to flow out of oil. We've got a new low in there, intraday and closing low. That shouldn't come as a surprise as the market broke through this support. I said it looked like we were testing, looking for a test of the lows, if not a lower low. There's no reason to be long oil in here still, so just no sense in trying to pick the bottom in here while it's still under this intense selling pressure each day. Semiconductors, let's take a look here. We saw yesterday this market was rejected at the prior support here, just below $17 a share. We had seen last Thursday and Friday rather that $17 level had acted as some resistance. If we can clear that, maybe that then paves the way for a move back up to the declining 50-day moving average. So we've got we've got to look at these as, what are the potential scenarios. By undercutting this low right here, we washed out a lot of stops, I think. Then we made a higher low. We're back to this 5-day moving average, and perhaps again, if we can get back above this $17 level, that we can look at this as a reversal, that we've seen the trend line break, we've seen a higher low and a higher high, a little shakeout, and these shakeouts are good because that which does not kill the market will only strengthen it. We get the week long shaken out, we get new shorts in there, and it removes supply from the market at these lower prices. So no reason to really look at this thing bullishly quite yet, but it's encouraging, it's improving, and realistically, we probably need another day, or the best scenario would be another day to a day and a half of just kind of base building for all these markets, and just continue to build some strength for a breakout. The financials, when I say a breakout, I mean a breakout past some of these short-term levels of resistance. They could lead to a rally of maybe a couple days. The financials also up on bigger volume, closed right up near the high. They were very choppy as well. I went home along a little bit of the UYG, which is again the leveraged XLF. So this is gives you twice the percentage movement that the XLF does, and we'll see what happens there. But they finished strong. This level had been important. We were also looking at the Fibonacci level in here, which off of that week and a half ago low to right here, right around $10.10, $10.20 was the level we were looking at. We're coming back up here, maybe right up to this 5-day moving average, but at the same time, it's encouraging to see that we broke these lows. Yesterday afternoon, we came down below this low as well, and we were able to see a little bit of weakness on the open, a strong rally up to this level, and a higher low. I mean, on a very short-term time frame, you can look at these and call them a cup and handle or whatever you want to call it. But basically, we're back above the average price of the last 2 days, and so that means even after Monday's real strong sell-off, the average price that this market traded at over the last 2 days is about $11.20. Here we are at $11.41. So you can look at that and say the average purchaser is in a position of strength, and the average new short seller in there is losing money. So that lends to the buyers regaining control of this market, despite the fact that obviously for the week we're still down pretty severely on a percentage basis. These lows are going to be very important right now at about $10.35. If this can hold as a higher low, it may be able to push up through this level here at about $13 a share. The next logical upside target would be about $15.02, and I think if these markets get to that 50-day moving average, they might run through it a little bit, because there'll be that initial a lot of people looking to sell short at the 50-day moving average, and a lot of times you get it to run up beyond it, maybe up towards 16 or so. So be careful if you're looking to sell this short on strength rather, because it's encouraging again here that these this level in particular, about $10, and I called it 10.35. I think if it can hold above 10.35, then we can hopefully build for a little bit further upside in here. It's still obviously in a bear market. We can look in here and see that left shoulder, head, potentially right shoulder, so getting up beyond that 12.5 would validate this inverted head and shoulders pattern, and would give us quite a bullish upside objective, because the height of this added to the breakout point would be our objective, which would bring us up towards about $17 a share, and that's obviously well beyond that declining 50-day moving average. So a lot of reasons to just continue to be very aggressive with the money management in here, and I think again that all this major volatility in here is actually encouraging for this market. We saw late in the day that this strength came on increasing volume, followed by a lower volume pullback in here. this resistance became support. So the financials are building a little bit, as is the rest of the market, for potentially a little bit more sustained upside. We've got big volume today in the SPY, much bigger. I mean, not much bigger, but it was obviously a lot bigger than yesterday, or it was bigger than yesterday, and we saw that, again, obviously we finished up 3.8%. The average price of the last 2 days, we're back above that after kind of getting really choppy in here late in the day. We also have some resistance here that's taken place the last couple days, really right around that 85.5 level, I think. So maybe a pullback and push up through that level would be bullish in here. Let's look at the 30-minute time frame. We can look in here as well at that potential for an inverted head and shoulders pattern, shoulder, head, and here we are potentially forming this right shoulder. If the market breaks down here, then you can look at that as it was just a potential inverted head and shoulders pattern forming. It doesn't take hold until it's able to clear the neckline here, and then we take the height of the head, add that to the breakout point from the neckline, and come up with our upside objective, which in this case would be quite aggressively higher here. And in this market, you can't count anything out. That's up near about 104. If we look at the daily time frame, we've got the declining 50-day moving average here at 96. Let's just keep our eyes on that first. This high right here from the election is 101. So I think 104 is a little bit too aggressive, but again, let's leave it up to the market. We'll take our action based on what the market dictates. But it is showing encouraging signs, not convincing, but encouraging. So perhaps we're going to see some further upside the rest of this week.